Energy Fuels has plenty left in the tank. After it signed a memorandum of understanding with Vulcan Elements to establish a secure U.S.-based rare earth magnet supply chain aiming to reduce reliance on China. The company plans to deliver high-purity neodymium praseodymium, NdPr, and dysprosium dy oxides from its White Mesa mill in Utah for validation in Q4 2025, paving the way for long-term supply agreements. Energy Fuels' neodymium praseodymium oxide has been qualified for use in rare earth permanent magnets for electric vehicle drive motors, having passed quality assurance benchmarks set by South Korea's largest manufacturer of drive unit motor cores. Its high-purity NdPr oxide, mined in Florida and Georgia and processed at the White Mesa mill, was successfully converted into NdPr metal, neodymium iron boron alloy sintered blocks, and high-performance permanent magnets. Energy Fuels supplied 1.2 metric tons of NdPr oxide, sufficient to power about 1,500 electric and hybrid vehicles. The qualified magnets are intended for drive units in electric and hybrid vehicles manufactured by automotive companies across North America, the EU, Japan, and Korea, with installation expected in new vehicles within the next few months. Energy Fuels' White Mesa Mill is the only facility in North America currently licensed to produce high-purity rare earth oxides from monazite. The company now plans to negotiate a potential longer-term supply arrangement with partners following the successful qualification process. Similarly, Microvast is positioned to benefit from the global shift toward electrification, supported by rising EV adoption and favorable government policies. The company develops and manufactures advanced lithium-ion battery solutions for electric vehicles and energy storage, with a vertically integrated business model providing cost efficiencies and performance differentiation. Microvast's Q2 revenue was $91.3 million, a 9.2% year-over-year increase, with EPS of 5 cents beating expectations of 1 cent. The company expanded gross margins to 34.7% and achieved adjusted EBITDA of $25.9 million, a comeback from previous year losses. Operating expenses dropped due to cost controls and lower share-based compensation. The Huzhou facility added 2 gigawatt-hours of annual production capacity for high-energy NMC cells, with Phase 3.2 expansion expected to start initial production later this year. The global NMC battery market is projected to see 14.8% CAGR from 2025 to 2034. China's EV market is expected to grow 2.5% annually from 2025 to 2029, positioning Microvast for potential gains. However, execution risks, timing, and geopolitical uncertainties like tariff wars could impact the project's success. Microvast targets 18% to 25% year-over-year revenue growth targets for 2025, forecasting $450 to $475 million in revenue, with improving profitability and lifted gross margin guidance to 32%. While its solid-state battery technology promises faster charging, safety, longer lifespan, and compact design. Just what the horsies wanted to hear after Workhorse announced that its W56 step van is eligible for incentives through California's Hybrid and Zero-Emission Truck and Bus Voucher Incentive Project, HVIP, with base incentives of $85,000 per vehicle. This eligibility applies to California fleets with up to 50 trucks, potentially lowering the cost of the W56 electric step van significantly. Workhorse-certified dealer Kingsburg Truck Sales is submitting over 20 HVIP voucher requests on behalf of customers who pre-ordered the vehicles, anticipating voucher allocations in the fourth quarter of 2025. According to Rick Dauch, CEO of Workhorse, the company's goal is to build electric trucks for immediate fleet deployment. The HVIP incentives are expected to boost demand for the W56, which is already proving itself in real delivery routes with FedEx Express and independent service providers. Workhorse is currently showcasing the W56 at the FedEx Forward Service Provider Summit in Orlando, Florida, highlighting the vehicle's performance, having logged tens of thousands of miles in service across California and other states. The W56 step van is designed, engineered, and manufactured in the USA at Workhorse's Union City, Indiana facility. It comes in 178-inch and 208-inch wheelbase configurations, offering cargo capacities of 1,000 or 1,200 cubic feet, positioning it as a viable option for zero-emission commercial vehicle needs. Then, as SEALSQ prepares security for a transition into a post-quantum computing world, it reported revenue of $4.8 million for the first half of 2025, which is consistent with the same period in 2024, reflecting this transitional phase. Despite the flat revenue, SEALSQ maintains a robust cash reserve of $121 million as of June 30, 2025, providing a solid foundation for future growth. Looking ahead, SEALSQ anticipates full-year 2025 revenue to range between $17.5 million and $20 million, representing a significant year-over-year growth of 59% to 82%. This growth is expected to be driven by resurging demand for traditional semiconductor products and the consolidated revenue contributions from the IC Alps acquisition, which was completed in August 2025. Key moves positioning SEALSQ for substantial growth in 2026 involve catalysts like the IC Alps acquisition, advancements in semiconductor personalization and test centers, including the Quantix Edge Security joint venture, and the initial sales of the QVault TPM post-quantum resistant chip. These initiatives are expected to propel SEALSQ towards 50% to 100% revenue growth in 2026. SEALSQ has already achieved notable milestones, such as delivering engineering samples of the QS7001 post-quantum microcontroller and outlining commercialization plans for QVault TPM. The acquisition of IC Alps has bolstered the company's capabilities, adding 100 skilled engineers and enhancing its expertise in post-quantum technology across sectors like medical, automotive, and IoT. With over $140 million raised in additional capital since November 2024 and a cash reserve of $150 million as of September 2025, SEALSQ is well equipped to capitalize on the escalating demand for quantum-resistant technologies. The company continues to invest significantly in research and development, allocating $7.2 million for 2025. SEALSQ's portfolio is strategically aligned with emerging regulatory requirements, such as the EU Cyber Resilience Act and U.S. Executive Order 14,144, positioning the company to lead the transition towards quantum-resilient security standards. This alignment, coupled with its technological advancements and strong financial position, suggests a promising outlook for SEALSQ as it navigates the evolving landscape of semiconductor and post-quantum technologies. For more on stocks and crypto, follow Ascencore. See you next time.